Hey guys, welcome back to our weekly live event where we're going to talk about finance, investing, and the market overall and how crazy it is. Currently, as you all know, we have the coronavirus, we have the oil crisis, we have all these issues, the highest unemployment we've had since the Great Depression, and 20 something million people not paying their mortgage, yet stock market keeps going up. So today we're going to talk about all the different things that we need to stay focused on and to not get distracted between the differences of what's happening on Wall Street and what's happening on Main Street. So let's focus on what we're going to basically go over is how to consistently stay focused on what's happening on Main Street, because what happens on Main Street is what happens first, and then it reflects on Wall Street. And eventually it's going to reflect in the housing market as well. So let's get prepared. Let's get ready. A lot of good things are going to be coming for those who are prepared. A lot of great opportunities. It's going to be a buying opportunity of I think of a lifetime, to be honest with you. We do get a great buying opportunity once every decade. This is about time. We're about a few years overdue for this opportunity. So let's get ready. Let's get focused, and let's be prepared to pick up all those great deals and make that money. So normally, as you guys know, we have a bunch of Q&A during this time. So you submit questions on YouTube Live, submit your questions on going live on Instagram. Also submit your questions in the questions section. So YouTube goes first. People who want to go live on IG go second. Questions on IG go third, and the DMs on IG go fourth. So submit your questions. I'll be happy to help. So far, again, to recap what's going on now, is that stock market keeps going up. Despite, let's stay focused on that, the numbers came out better than expected, right? But the numbers for quarter one for these companies are really only show about 2 weeks of the coronavirus affecting the economy. So yes, they're going to be better than expected, given that it's only been about 2 weeks. And the numbers were better than expected, but they were still significantly down compared to prior year. And that was only 2 weeks of effect of the coronavirus on the economy. Now we're going to be we're in quarter two, and almost the entire quarter two, we're being affected by the coronavirus, right? New Jersey, New York, a lot of California isn't really going to reopen until June 1st. Some parts of Florida is currently reopening. So we're going to have a significant impact on the stock market and earnings for the companies in quarter two. In addition, we have the largest amount of unemployed people in the country since the Great Depression. We have a significant number, probably I think from what I remember is 20 million people are in forbearance on their mortgage. Many businesses that I've talked to said that they're not going to reopen after they're not going to reopen, period. They just can't reopen now for as much money as they've lost, and the amount of stimulus that they're getting from the government, most businesses aren't able to tap into it. So it's becoming a great significant problem for the globe, right? The entire world. So right now, for those that are prepared and getting prepared, I strongly believe there's going to be a great buying opportunity in 12 to 24 months. Now, for those that haven't heard in the past my explanation, my reasoning is this. We have about 12 months of forbearance, right? So 12 months of forbearance means this. People can push back to pay their mortgage payment for up to 12 months. So right there, that is going to keep the foreclosures from happening immediately. From that time, then the foreclosures are going to start happening. Now, the question would be, well, Pascal, why would it happen after 12 months? People should be getting back to work. A lot of people are not going to be getting back to work. And if they are going back to work, a lot of them are not going to make the same money they did in the past. So for them to refinance will be quite difficult. We previously, 2019, last year, 70% of Americans couldn't cover a $400 emergency. This is a $4,000 emergency. So we're going to see a significant amount of real estate going up for sale, commercial and residential. Now I'm looking to get into buying some restaurants, real estate, not the business, and hotels because I believe they're going to be severely impacted. And I want to buy in some great areas where I know the restaurant industry is going to be strong, where hotel industry is going to be strong, but they're going to be impacted. So I want to be able to buy these distressed properties when they come up for sale. As we all know, a lot of people are saying, "Hey, it's really expensive to buy real estate right now," and that's true. So, what in 12 months we're going to have a great opportunity to pick up uh, real estate on a more reasonable price point. Um, and I don't think it's going to be over in 12 months. I think it's really just going to get started in 12 months. Another really important point you guys need to know is that 9 months ago, I was told by my real estate broker, that specializes in foreclosures. He gets foreclosures from the banks and from hedge funds. And when they have foreclosures, they give it to his brokerage to list them for sale on the MLS, multiple listing system, if you guys don't know what that is. So when that happens, or obviously anyone can buy the properties. And what he told me is they gave him a heads up to say, hey, we're going to have a lot of business for you in 9 months. This is what happened. And this is why. Okay. So back in 2017, 2018, these big hedge funds and banks, all these hedge funds bought a large portfolio of real estate from the banks. And that was also back in 15 that happened as well. Now, during this time, these hedge funds decided to get into the real estate business, buy a whole bunch of real estate, and use that basically as another investment for them. And they gave a lot of these properties to property management companies. And basically, these property management companies did not do a good job of managing this real estate. It's not been performing. They've had to spend a lot more money to fix them up. It's been very difficult for them to make money in this asset. And they believed, they had a feeling that the real estate market was going to go down. So they decided at the end of the 3-year period of their contract, they were going to start selling the real estate. So as this properties, the leases are coming due on these properties, they're planning to not renew on these pieces of real estate and to start selling them off. Now, the thing with that is they were planning to do that at this point in time, and they have not been able to execute as fast as possible because they're not allowed to remove anybody now because of the coronavirus. So that's kind of taking them a little bit more time to do that. But this has been a plan for 6 to 9 months. And so some of the foreclosures you're seeing now, and you probably have noticed, I've noticed that there's a lot more available. Those have nothing to do with the coronavirus. That was the plan of these hedge funds about a year ago. This has always been their plan. So now these foreclosures we're seeing have nothing to do with the coronavirus. So imagine these foreclosures are going to hit. Plus, we're going to have foreclosures because of the coronavirus, people being out of work. So we're going to have a significant domino effect. People that bought brand new homes are going to probably be selling them. And builders, there's been a significant amount of building happening in the last few years. All the builders are going to end up starting to sell these properties at a deep discount as well. So I believe in 12 to 24 months, we're going to have a glut of homes available. Everyone's going to want to buy them, but the people who can actually buy them is limited. The number of people who can actually get the loans. That's why I came out with that course, links in the bio, which is Foundations of Personal Finance. It basically helps you get all of your personal finances in order so you can buy your first rental, your second, third, or fourth. Because what happens is the first one is pretty easy to get. Your second one's harder. Your third and fourth, it gets harder and harder if you don't have your finances in order. So for those that are prepared and are ready to buy this property, because everyone's going to want to buy them because they're going to be such great prices, they're going to wish they could get them. And they're going to be very frustrated in the future when they can't get them because they don't have the personal finances in order. So, and that's basically how I was able to get to 23 units by the age of 23, because I got my credit in order. I got my tax returns in order. I got my bank account in order. There's a certain way you need to have your bank account as well. Otherwise, you're not going to show good seasoning of your funds and your knowledge. So by having all those combined together, you're able to can move on from your first to second to third to fourth. And if any of you guys know anyone who owns 1 or 2 rentals, they'll probably tell you, hey, going from one piece of real estate to get the second one is pretty hard. And to go from your second rental to your third rental it gets even harder. And if you don't do your finances in order, it gets harder and harder. Now, if you do them right, it can get easier and easier, but you have to have it in order, and you have to do it in a way where basically you have to set up your finances in order. So when a bank looks at it, you don't have to guess, oh, I really hope the bank's going to approve my loan. The way I set up my finances was I set them up so it's the exact way they want to see it. So they say yes. Because remember this, the bank's job is to give you money. They don't want to say no. They want to say yes. So just make sure that you have everything in order in such a way where they're going to say yes. So that is basically what I see in the market. Let me adjust. I'm a little blurry here. I'm not so blurry here. Yeah. So on YouTube, brand new camera, brand new audio. I think it's what do you guys think? Is it good? I think it's really good. Quality is awesome. So I'm really excited because there's going to be another opportunity to buy. Let me give you a little bit of backstory. Back when I was 23, I had 23 apartments, and then the market tanked at 20 when I was 25. And I said, when this happens again, I'm going to buy everything I can buy. I'm going to buy as much real estate as possible because they're like half price, and I don't want to miss out again. So for the last 10 years, I've been planning and preparing for this moment, right? For this moment to buy properties. Now, just so you know, most of the properties I bought, 99%, are not foreclosed properties. Okay, so I'm not buying properties from people that are distressed or homeowners that are having a hard time. I don't do that, right? I don't need to do that. One, because I buy rental properties, and most of these rental properties that you're gonna buy, this is the good part. People ask like, well, Pascal, if they're so good, why are people selling them? Who we're gonna buy from are the people who are 60 to 70 years old that have been in the game for 20, 30, 40 years and just don't want to do it anymore. That's where we're going to buy from. And a lot of them are going to be willing to give you owner finances as long as you have your finances in order to look good. Because if it looks good to the bank, it's probably going to look good to them as well. So you have an opportunity to buy housing, buy with loans from the bank, buy with loans doing owner financing. There's going to be a lot of opportunities. And you're not going to have to be worried like, oh man, I'm going to take a property from someone that just lost their house. No, I teach you guys to buy multi-units. These multi-units are going to be from someone that has a lot of money, that realizes, okay, they can't sell that fourplex for $600,000 anymore. They have to adjust it to market, and they need to sell now, so they're probably going to sell for $400,000. And they're going to be upset because they should have sold it 2-3 years ago and they didn't. So they understand, but they still bought most of these properties at $150,000 or $200,000. So still selling it at $400,000 isn't going to be a loss to them. It's still going to be a profit. So that's why I also don't feel bad because, hey, you still made a lot of money. Now it's my turn to make money as well. We both win. You know, I'll take this property off of your hands. You don't have to worry about fixing it up anymore, managing tenants, and so on. So it's a win-win. But this is the opportunity now where you're going to help them because there's very few people out there that are going to be able to purchase these deals, right? So that's why the foundations of personal finance are really essential to make sure you have everything in order, because it's going to be really painful to come to time where you're not going to be able to close on a deal for some reason. Either it's your credit or your seasoning of your cash in your bank account or your tax return or some other factor like your seasoning of your real estate experience. There's also a way to get around that as well by teaming up with a partner. So lots of opportunities are going to be coming out. Just be prepared for it. And it's going to be great. So now we're going to jump in. We've been at 15 minutes of, spewing out all this information. Now we're going to jump into the Q&A section, guys. So again, submit your questions through YouTube Live, in the Ask to Go Live on IG. Submit it in the question section of your of IG. And then lastly, I'm going to check the DM. And again, there's a little paper plane. Send that off to your friends. Invite them to this live event, right? The more people that are studying and learning in your group, the stronger your group's going to get, and the better and faster your finances are going to be able to grow. All right, so let's go check out the first person that's going to go live, Harris. All right, Harris is unable to join. Let's go. Oh man, it's giving me issues again. All right. George said, hey, hi, Pascal. I purchased your course, but I'm not sure how to access it. So the reason that it's on sale right now, it's such a huge discount, right? Like I had other people review my course. They said it should be selling for like $3,000 with all the information in there. I mean, if you go and review everything you're going to learn in that course, it's a lot, right? I'm doing pre-sale. It's going to be effective to access the course June 1st. It's on pre-sale right now. Right now, it's on sale for $297, okay? It's going to triple. I'm going to sell for at least $1,000 after this month. Now, it's $297 now. It's going to be accessible June 1st. In addition to that, one person is going to win a week event with me at my coastal cottages, and we're going to be going over personal finance. We're going to go over investing. They're going to basically have a week with me to pick my brain and get all the information. And that's one of the winners is going to be out of that group. If you refer your friend to purchase the course and they win, you both get the comp. So it's going to be a great opportunity. The live event in person is going to be the end of July. So it's a lot of time, and it includes the week long, and it's free hotel as well. I'm going to include the room as well. So all you have to do is drive down or fly down. So it's basically as cheap as you can make it. So I'm picking one winner, and that one winner, if they referred a friend and their friend won, then both get to come. So it's one winner, but two people get to come. All right. So Smith said, or Schmeichel says, I have great credit, but not much money. How do I get started? So it doesn't matter how much money you have, because you can either take on a partner, or you can take money out of your 401k, or you can actually there's a lot of free money out there where like the city or non-for-profits will give you the money for your down payment. Another way is you can get a seller's credit to cover your down payment. So those are multiple ways that if you don't have enough cash, you'll be able to get assistance to purchase the property. So remember, it's not just credit though. It's credit. And if you're having an issue with cash, there is non-for-profits that'll help you. In addition to that though, is you need to make sure that you have your tax returns in order. Because if your tax returns are not in order, you won't be able to qualify for the loan. So it's not just credit. All right. What's up, Avocado? All right. What's the timeline you think these homes are going to sell at a discount? I think we're going to start seeing the discounts about 12 months is when we're going to start seeing more of these properties going for sale. These are the properties you're going to see in about 12 months are not foreclosures from the coronavirus. We're going to have foreclosures that have been on the books for the last 2 to 3 years finally hitting the market. And we're going to see a lot of new homes for sale by builders that are trying to get rid of their inventory before things get bad. That's a group of properties you're going to start seeing at a discount. We're also going to see established real estate investors also try to get rid of their properties at a discount because they know what's coming. After the 12-month period, we're going to start seeing some more foreclosures. Then that wave is going to get hit harder and harder. The longer the unemployment rate is high, the more properties you're going to start seeing hit the market at a discounted rate. Because even people selling their houses are going to start dropping the price more and more and more. And I'm already talking to a lot of people that are dropping the price of their home because they know what's to come. So, be prepared. And this is the other thing I was explaining to you guys before. Properties are going to go up for sale. And you might see in one neighborhood, the price went down 5%. In another neighborhood, it also went down 5%. But in a lower income neighborhood, a 5% drop is not enough money. Lower income neighborhoods and in rural areas, they usually drop significant amount. So a 5% drop in a good market in a bad market is not equal. It has to be more in the rural areas and in the lower income areas. Also, condos drop hard. So don't think a 5% drop in a condo where you see a 5% drop in a house is the same. No, condos are going to drop probably like 20, 30%. So be very, very careful. Don't just think, oh, 5% drop, 10% drop is enough. I would say it's not enough. I would say condos need to drop probably 20 to 30% minimum, right? Minimum. So I think you're going to be able to, especially brand new build condos are going to have major price drops. In Florida, they were selling condos on the water, right? Condos on the water. They used to sell for like $700,000. We're selling for $200,000. These were beautiful, like so nice, like amazing looking condos with all the bells and whistles. 700,000 they're selling for 200. Then you're going to ask why, right? Why would someone do that? This is why. Every condo has association dues, right? How a condo works is this. In a single family home, you buy a house, you change your own roof, you paint it yourself, you maintain it yourself, everything comes out of your pocket. In a condo, let's just say there's 100 units in the condominium. All 100 share. They share the cost of the roof, the asphalt, painting, insurance, water, sewer, garbage. They share all those expenses. Now, if 20% never got sold, that means the other 80 people have to pay for the full 100 units of expenses. Now, say a lot of those people bought their condos for 500,000 and now they're selling for 400. They're going to be like, forget that. I don't want to have a negative asset where I lost $100,000. I'm not going to pay my mortgage. I'm not paying the association dues. I'm going to let this go and I'll live here for probably for a year or two for free. Now the 60 people remaining that are paying their bills have to pay all 100 units of expense. So their condo fee might have been, say, $500 a month. It went to $700. It went to $900. The condo association fee on that one property I mentioned that was going for like, say, $700, that ended up selling for $200. The condo association fee on that property was like over $1,000 a month. I think maybe even past $1,500 a month, just in association fees, not mortgage, tax, insurance, nothing else. So it became super expensive. Now, for a wealthy individual, that might be a good idea for them to buy that condo and wait for 2 to 3 years until it kind of stabilizes. All of them get resold out, and they stabilize all the expenses again, and the expenses drop down to more like $500 a month, back to normal, and then the price will go back up. Because the interesting thing with condos is this: if your condo association dues go up, the sale of the price has to go down, because when the condo association due goes up, that cuts into the monthly payment a person can afford on their mortgage. And if they can afford less on their mortgage, what happens? The price has to come down to make up for that. So that's where condos drop hard and they end up coming back very, very strong, right? But they normally come back at the very end. They're not the first thing to rebound. They're almost the last thing to rebound. So be very careful. I know this was a lot of information on condos I gave you. I gave you a ton of information. I mean, literally, I can do hours of just explaining how condos work and how the little details of them work. That's why I tell people it's almost never, 99.9% of the time, you could not make money on condos. It's extremely rare for you to be able to make money on condos. All right. So someone's asking to go live. Let's see if this works this time. All right, Dallas. Let's see if that works.
Hey, how are you?
Doing good. How you doing, Dallas?
Good. I've been following you for a little while, and I just want to first of all, I want to say thank you for the information that you put out. Um, I recently bought my first investment property. It's a fourplex. I'm going to be house hacking with an FHA loan, and so I'm really excited about that. But I live in Maryland. It's fairly expensive here, not like insanely. It's still a 1% deal, so it was good. But I'm considering relocating down south. Number one, because I've lived there before. I lived in Georgia for a little while, and I like kind of southern, aspect of living. But also, a lot of the real estate deals can be appealing.
Mm-hmm.
So I was wondering, of three things, if you could choose a state that has either A, lower property taxes, B, a lower, like no state income tax, like Tennessee, or C, a really, really low cost of living, which one would you choose? They're not all directly related to your real estate cash flow, but they're all related to your lifestyle cash flow. So they can, you know what I mean?
Mm-hmm. So
just because you have a low property tax like South Carolina, my top four that I'm interested in are South and North Carolina, and then Georgia and Tennessee. So they all kind of have different aspects that can be beneficial. But in your opinion, what of those three would be the most beneficial?
So I think in the over 15 years, I think Tennessee and North Carolina are going to be good, just because a lot of people that are retiring are going to probably move there. But those are not my first choices. I would go Florida, Texas, Arizona. Those are my choices. There's going to be the silver tsunami, which means all the people that are retiring going to be moving to the warm weather. We have the no income tax, right? And we just have great, strong economies, and they're also real estate landlord friendly. Now, multiple things you mentioned are positives, right? But you don't want to focus on one positive. You want to have multiple positives. So when I'm looking at a piece of real estate, I look at multi-units on commercial land that can rent out annually and make good money, and Airbnb, or I can bulldoze a building and build a bar or a restaurant there. So I have multiple ways I can win on a property. In worst case scenario, I rent it out as an annual tenant with two an annual tenants and make a lot of money anyway. So no matter what, I win. The question is, how much do I win? So that's when you should look at something. Since there's so many opportunities out there, you should find something that you can win multiple ways, not just one way. I think short term, since there have been a lot of properties built in North Carolina and Tennessee, there could be a downturn, right? And so that's why if you're going to buy anything, I would wait a little while. I would wait at least a year before buying another property. This is a good opportunity for you to, adjust your fourplex, in the sense of doing upgrades to them so you can increase rents, or at least make it nice enough where you can stabilize your rent, where if you do lose someone, you can get another person pretty quickly. If you're able to add enough value fast enough, maybe you're able to do a cash out refinance, or maybe you can't do a cash out refinance, but maybe you can increase enough value where you could do a refinance, not take any equity out, but get rid of your PMI and then increase your cash flow that way. So there is multiple reasons and ways to increase your net cash flow without possibly increasing your loan.
Right. So Florida.
I'm here. Again, there's Texas, there's Arizona. I mean, Georgia's not bad too. I mean, that's an option for me too. It's just not a first option. I do like North Carolina, I do like Tennessee, but again, it's not it's not going to give you the biggest bang for your buck. But then again, if you're planning to live there and you want to live there for the rest of your life, it's not a negative, right? You still make it happen. There's a lot of wealthy people that are winning in the real estate game in Tennessee and in North Carolina. So it's in actually every state too, It's really about there's multiple factors to consider, as you mentioned, in all of your decisions.
Is it more beneficial for lower property taxes to increase your monthly cash flow? Because with like Tennessee and Florida, with the no income tax, does it really help you all that much because of all the beneficial write-offs you get through your real estate? So you wouldn't be, you know what I mean? You can deduct your income so low with real estate that having the no income tax doesn't really benefit you that much versus a really low property tax.
Let's put it like this. Property tax in New Jersey is super high. Property tax in Florida is very low. But our insurance is higher. But our rent is lower. So, it's really what comes down to is your net income and your cash on cash return. And there's certain factors like, is the laws in favor of the landlord or the tenant to determine if is your net income going to be affected by any such like thing, in the sense of someone being in your property for 9 months and not paying rent and you can't evict them. So there's certain factors that come into play. So you have to kind of be considerate of everything. At the end of the day, you're looking at net income is going to be one of your major focuses. Part 2 is going to be appreciation. Now, if you buy in certain parts of any of the 4 states you mentioned, there's a good likelihood for you to have a significant amount of net income, cash on cash return. But at the same time, a lot of those areas are not going to have much appreciation. So you're going to bring in cash, but you're not going to build a lot of wealth. You will build wealth over, say, 10 or 20 years. But some of the properties the areas I'm focusing on, I mean, one of the properties I bought in 2007, one of the properties I bought 7 years ago, I bought it for $180,000 and it's now worth $550,000. I only put down $40,000. So $40,000, that made roughly $350,000 in wealth. So my net equity or my total equity is $390,000 in that deal. So, I'm not saying you can't do that there too. If you study your market, you might be able to do that there as well. But you have to be focused on doing every single thing possible to add to your likelihood of success. And the reason I like Arizona, Texas, and Florida is it's warm states with no income tax that a lot of retired people are going to move to, which when all these retired people move there, it's going to naturally push up the housing prices by supply and demand. So that's my logic. But again, North Carolina, a lot of people like North Carolina, a lot of people like Tennessee. So those are options as well.
Okay. Thank you so much.
You're welcome. See you later.
All right.
All right. So low taxes, bad school district, high taxes, good school district. That's how I see it here in New York. In New York, yeah, it's a little bit more common. In Florida, it's not so, that doesn't work exactly like that. A lot of times it's because in New York, your dollar per square foot can change a lot depending on your neighborhood. In Florida, it can as well, but not as bad. Normally, in the nicer neighborhoods, usually you get a larger home. So you're paying more taxes because you have a larger home. Not so much because of taxes are just more because of the area you're in. There does play somewhat, but not that much compared to like a New York or a New Jersey. All right. Be Enlightened says, any townhomes similar to condos? I know you say to stay away from townhouses, but they're so popular amongst people who are looking to rent. So if you run the numbers, again, with townhouses as well, a significant amount of them, I'm going to say 90% plus, are not profitable. You cannot cash flow with them. Run the numbers yourself. If you need me to run them, I'll run them for you. I have people that work for me and that's what they do. They run the numbers and you'll see you're not going to make money. I mean, most of the time when someone asks me, I just say no. And then afterwards I run the numbers because they want to see it and they see, wow, I'm going to lose $400 to $500 a month renting this property out. So it's condos and townhouses are very enticing because you're like, wow, I can own a property for a low amount of money. And what I want you guys to understand is the amount you're purchasing a property for does not, like if you buy a property for $100,000, that does not make it cheap, right? Cheap is dependent on how much money you're going to make off of it. It depends on other factors, but the dollar amount you're paying does not mean something's cheap, you know? So I just want to make sure that's clear. All right, Eduardo has a question. Let's see if this live works. Is everyone doing good with the live on IG? Because it doesn't seem like the connection is working very well. Remember, I'm also on YouTube Live. The connection is a lot better. Camera quality, audio quality. Feel free to join. So George says, what tips can you give a landlord in New York about collecting rent and evictions? It's tough, George. Evictions and collecting rent in New York is very, very tough. Make sure you have enough money in deposit. Make sure you're crossing your T's and dotting your I's. And make sure you have a good lawyer, because that's a very litigious state, and it's in the favor of the tenants. So it's a lot tougher to win. Benny says, hey, Pascal, connection is looking good. Awesome. Brett says, I am losing somewhere on my townhouse because that I cash flow $450 on it a month. I don't understand, Brett. You said I am losing somewhere on my townhouse because I cash flow $450 on it a month. Is that positive cash flow or negative cash flow? All right. So, King, state your question again because I forgot it. Brett says it was a question. So so Brett, so you're making $450 a month on your condo. Is that what you're saying? Now you got to ask. So the next question is this: how much money do you have? How much money, cash, do you have in that property, and how much equity do you have in the property? So then you multiply the 450 by 12, right? So it's about $5,400 a year. Divide that $5,400 by how much cash you put down or how much equity you have in that property. Then you're going to see what your return is on that deal. So, for example, let's just say you put down $200,000 on that property. If you're making $5,000 on a $200,000 property, that's like 2.5%. It's not a lot of money. Most people I talk to usually make 3% or less on their money. 3% of their money is very, very little, right? Like people who invest with me make 8% on rent alone. That's not even talking about when we sell the property, the additional money they make there. Normally they make about 15% internal rate of return, where you're making 3% on a condo. Again, most of the time, 99.9, you're not going to make any money. There's the 1% of the time people make money is they bought the condo in a foreclosure and then they Airbnb it. And that's if they're in a good area that can Airbnb. Juan says, how do you know if you bought too much house or paid too high? Normally, you'll know if you bought too much houses if you're not using the extra rooms, right? If you have extra rooms, you bought too much house. If it's too large, if you pay too much money, you're going to compare to what the other homes sold in the area. So if you're on the upper side of things, on the higher end of things, then you probably paid too much. If you paid almost market price for your home, you probably paid too much. Prices are going to come down. And so if you're near what the market price is or something, then it's going to go down. All right. Restoration Roofing says, I have $15,000 to invest. What type of property should I be looking at? You guys know I like 4-unit properties minimum. If you're going to be buying, and again, this is assuming you're going to buy a 1 to 4 unit property. If you can buy a 10, 20 unit property, then obviously that's even better, right? What Grant Cardone says, you should buy a minimum, I think, of like 16 or 32 units. Yeah, I do agree. You should buy largest possible, but normally people can only buy a 1 to 4 unit. So I would say try to buy a 4 unit, at minimum a 2 unit. Because again, your first time home buyer is going to be the easiest loan you can get because you're going to have all the benefits of the assistance from the government. You have the option of the FHA loan with 3.5% down. That's what I encourage, because it's the easiest. The first loan is going to be your easiest loan to get. So you should spend it on a multi-unit property. Hi, Pascal. Where are you based? USA? If yes, what part? So I'm based out of the Tampa Bay area, which I'm in the USA, state Florida. What part of Florida? The Tampa Bay market. So I'm based in the Tampa Bay market. I'm actually close to Clearwater, Florida, which we have the #1 natural beach in the country. So it's a very great place to visit. So Nielsen says, for a student starting college, what income would you recommend to get started? So I definitely try to, that's, obviously the answer would be like as much as possible. But I was only making about $12 an hour when I finally bought my first place. So my tax return for the first 2 years only showed about $24,000. First year, I think, was like 17 or 18,000 because I didn't work for a full year. The second year, I showed about 24,000 of income, and that's when I bought my first property. So you don't have to show a crazy amount of money to buy your first rental property. You just have to make sure that your tax returns look good, your credit looks good, and the money in your account looks proper as well. So you have to make sure that all of your money is seasoned and you're not hiding any of your money under your mattress, because that's going to make it harder for you to qualify for a loan. All right. West Hoboken resident says, what different markets call for different returns? That is correct. Different markets do call for different returns. Yes, different markets have different returns for cash flow and different returns for off of appreciation. King says, why I get 2 loans in my property. Okay, so I have a video. So King is talking about the video that I put out. It says, why I get 2 loans for every property that I own. So when I started, I would, in addition to doing the Burr method, I normally would get 2 loans. I'd buy a property, fix it up, rent it out. I would live in 1 unit, and I would get a loan for 80% loan to value of the new price, right? So say it's worth now $200,000, I'd get a loan at 80% loan to value. I'd get a loan for $160,000. That's a 30-year fixed rate loan, great interest rate, no PMI. Then I would get a second loan. The second loan would be a line of credit. And that line of credit, I would be allowed to get it because I would be occupying the property. And I would get a line of credit for the other 20% of the property's value. So then I would get the other $40,000 out of the property. So now I have no money in this property. And it's easier to do that on a property that you live in. Okay. So what you do with the money, it's very important that you don't spend that money on anything frivolous. You take that money and I would reinvest it into another deal. So this works if you're prepared to reinvest into another property. But you don't want to just do this if you don't have your tax returns in order, you don't have your credit in order, you don't have everything in order, because otherwise you're going to be sitting on this money and have nothing to do with it. And then you might end up just blowing it. Or even worse, take that money and put it into the stock market. Because what ends up happening is a lot of people will take this money, put the money in the stock market and be like, oh, I'm going to make money on this cash. And what happens is the stock market tanks. So now you took a loan, put it in the stock market, and the market tanked. And now you still owe that money. And you have no equity in your property, and you're stuck. Why I take that money and put it into another rental property is because I'm buying another rental property that brings me good cash flow and is going to be enough money to pay for the line of credit that I took the money out on. Right? It has to be a good property that you're going to cash flow on. And obviously the market's going to be down now. So you want to make sure that you're buying something significantly under market or significantly lower than what it was before. So then when it goes up, you're going to get a lot of appreciation. So with debt can be on your side if you're buying assets with it, and especially if you're buying discounted assets, because then when it goes up, you have a significant gain. I hope that answers your question. All right. So Richard says, do you know anything about VA loans? If so, what do you think about them? So VA loans are great. VA loans are great. Now, again, there is a lot more fees associated to a VA loan. So there's that part of things. But with a VA loan, you don't have to put any money out of your pocket. And that's awesome, right? You can buy a 4-unit property, put no money out of your pocket. And again, it still needs a cash flow, right? It's not like they're going to give you unlimited amount of money. They will give you basically unlimited amount of money to buy a property, but it still needs to cash flow between what you're making for the portion that you're going to be paying because you live in the property and off of what the property is bringing in from the tenants. So it's a great opportunity as long as you're buying right and managing the property right. It's a great opportunity to make money and to grow. All right. Let's see here. Next question says, so you're saying I can get a line of credit on my current home that I own and use it to buy another property? Yes, that's what I'm saying. Because the line of credit you get on your home, you can use it for whatever you want. When you get a line of credit on your home, it's basically a credit card, but it's a credit card that's attached to your house. It's attached to the value and equity you have in your home. So you can use it for whatever you want. And it's a lot less interest than a credit card. Excuse me. My line of credit on my house, I think is like 4%. So it's very low interest. Okay. No, line of credit is not the same thing as remortgaging. So refinancing your property is taking your first loan and it's basically taking a new loan, paying off your first loan. Okay. That is a refinance. Your first loan was say $120,000. You're doing a cash out refinance at 80% of a $200,000 property. Your new loan is $160,000. This new loan paid off your first loan of $120,000, so you get the difference of $40,000. Line of credit is usually a second loan. So now you have the first loan of $160,000, and then you can get the remaining equity in your home for another $40,000. That is what a line of credit is, and that's what equity you're being used. It's the remaining equity from on your home. Interesting info. Yes, it is. It was very interesting when I found all this out as well. A lot of things, again, the stuff I teach here, the stuff I teach on my course, it's not things that anyone's teaching you. So a lot of times you're going to hear something I'm telling you, and you'll be like, I've never heard of this before. And it might sound amazing. It might be like almost too good to be true. It's true. I mean, these are all the things that I use to keep buying more and more properties. So they're not being taught, and unless you know to look for them, you're not going to be able to go out and find them, or you're not even going to know to ask these questions. That's why it's really important to invest in your knowledge and invest in studying your market, so you know when you do learn how to use all these tools, you can find the proper real estate to buy, because these tools are going to help you. Studying your market is going to help you. You combine these two together, you're able to use these tools to buy assets at a discount and build your wealth. Mark says, very interesting. Thanks for everything, brother. I love your lives. Very informative. Thanks, Mark. All right. So King says, where did you research to learn that information? I want to read into it. So I went to school I got a finance degree, minor in mathematics. I got a second degree in accounting, minor in economics and international business. I've read 1,000 business books. I worked at Bank of America as a banker. So I did loans when I was from 19 to 21. I was doing mortgages. So I learned all this working there. One of my best friends, his mom was one of the best credit cleaners, and they lived in my neighborhood. So I would go over and I would learn from her, and I would basically do stuff for her. And basically I went to all these different people that knew different things, and I would do stuff for them. In exchange of me like helping them, I would learn this information. Another guy that goes to my church, he's my mentor in taxes. So I learned taxes from him. How does individual tax returns work and how do corporate tax returns work? Because even though I got an accounting degree at college, they don't teach you how to prepare a tax return, right? And even though you learn certain things, you have to learn how does a bank look at a tax return? How does a bank look at credit, right? Like we all talk about credit and not abusing your credit, but most people do not even know how credit works. Like this is one of the things that most people don't get, and it's like when they hear this, they think it's kind of crazy, is that if you had a car loan, right, and you did something good and you paid off your car loan, so you no longer owe debt on your car, right, and you showed that you were really great at paying this debt off, a lot of people think that their credit score is going to go up. Actually, their credit score doesn't go up. Their credit score usually goes down. Because what you did is you got rid of one of your credit sources that's saying something good about you. That disappeared. So now there's one less thing saying something good about you. So a lot of people think, oh, I shouldn't have any credit cards, or I should have very few credit cards. That's a misconception. That's not automatically accurate for everybody, right? Each person has a different situation. Tax returns. Tax returns are not black and white, right? They're not that simple. To just because you went on TurboTax and you prepared your taxes and you got a number and the IRS didn't call you, doesn't mean you did it right. Didn't mean you got the most money back and prepared it in such a way where you're going to give yourself an opportunity to get more loans in the future. So it's not that simple in each of these areas, right? There's ways you can optimize each section to get the most benefit. Like, for example, on a tax return, if someone just had a baby, their child was born in December, and on the tax return it says, how long has this child lived with you? So if we're doing tax returns in 2020 for 2019. The baby was born December 2019. On the tax return it says, how long did the baby live with you? Most people will put 1 month, but that's not accurate. The accurate answer is 12 months. So just because it's logical doesn't mean it's how it works in the financial game. Most people don't play the game monopoly accurately. Like they don't play by the rules. They play how they think it should be played. And then they expect everyone else to play their game. And that's why everyone argues with their friends when they play Monopoly, because they're like, no, that's not how we do it. This is how we do it. That's how we do it. So a lot of times the same thing applies in the real world and finance. You have to know how the game is played. You have to know what the rules are so you can play them, because otherwise you're going to think it works one way and it doesn't, right? And then you're not going to be able to benefit. B in line says, how much will my late mortgage payments and loan modification on my credit report affect my chance of getting approved for a loan? Will I have to wait 7 years for it to fall off? It depends, to be honest with you, because it depends on what else is on your credit report. There's multiple factors that can affect it. I mean, there's people who have foreclosures, and right after their foreclosure, right after the bankruptcy, they're able to get another loan for another home. But it's not black and white. It's not simple, right? Like you have to look into all the details, and then you're able to come up with a solution, a game plan, right? So it's not simple enough for me to answer it to you in like a 1 or 2 minute explanation. Juan says, I live in Tampa and interested in learning. Would you ever be okay with someone mentoring or shadowing you? If not, is there any books or sources you could recommend? So I currently have someone that's shadowing me that's working for me for free. He's been with me for about a month now, and I have people that come and go periodically. Currently, I don't need any more, and even though he works for free, it takes a lot of time for me to teach him, and it takes away from my workday. So I don't really have any space now. I am having an event in the end of July where we're going to be inviting people to come, and I have the course that I'm doing pre-sales now on my bio on IG, and if you DM me, I'll send you a link of all the books I think you should read. Because what you have to do is you have to change the way you think, right? That's the biggest issue with most people, is that the way they think is the way that we've been taught by everybody else that is not a real estate investor. that is not successful, right? I've met a lot of great people in my life that will give you advice and they have the best intentions, but their advice isn't accurate. Like my mom, I love my mom. I went to visit her today because it's Mother's Day, right? She still will talk about and give me certain advice that I've been doing this for like 15 years with my own money, 20 years with helping other people as well. She'll still tell me to do things the wrong way. Now, to her, it's the right way. That's the common way people think. My dad says the same thing. He's like, you should not have more than 30% loans on all your property. I said, Dad, I bought that $1 million property. You're telling me I need $700,000 cash to buy that $1 million property, in your opinion? I should have only a $300,000 loan? I said, and what world can any of us making $10, $12, $15, $20 an hour save up $700,000 to buy that property? It would take my whole life to do it. And by the time I come up with even $200,000, the price almost doubled. The government sets up that our inflation is 3% a year. That means in 10 years, all assets will go up about 30%. This is their plan. This is the goal. It's written in how they're planning to print more money and cause this to happen. So that means unless you are faster than inflation rate in building wealth for your down payment, you're never going to do it. So unless you go the loan route or get a lot of partners with a significant amount of cash, you're never going to be able to do it. So I can't go by their way. The old school way doesn't work anymore. That worked prior to 1980. But now, since we're a fiat currency that's not backed by gold or silver, we have to go this way because they're going to keep on printing money. As you notice, they just printed what? Like $4 trillion? What do you think is going to happen to the value of the dollar? It's going to go to nothing. Only thing that's going to go up, real estate, gold, silver, stocks, companies, all assets are going to go up. So how do you know if a property is good? You have to study your market, because if you study your market, you'll know what a property is worth in good condition. You know what a property is worth in a rough condition. And if you don't study your market, you won't be able to know, because a property in a good condition in one neighborhood is worth a certain amount dollar per square foot. So for example, in the lower income area, homes sell for roughly about $100 per square foot. In the better area, they'll sell for about $175 to $200 a square foot. In the really nice areas, they'll sell for $300, $350 a square foot. And then the ones on the water, like say on Clearwater Beach, they'll sell for about $500 a square foot. So depending on where you're buying, the price per square foot changes. And that's how you have to learn the value. Also, in Clearwater, $500 a square foot, the price of something that's remodeled is not the same as something that's not remodeled. You have to learn the difference. The price for a condo is not the same as a townhouse. Compared to also a house is not the same either. So you have to study your market, or you have to team up with a real estate agent that knows their market very well, and they'll be able to help you. So this real estate game, everyone thinks it's like a single player game. You know, you do it by yourself. No, you got to team up with the right people, right? You got to team up with a real estate agent that knows what they're talking about. And if you want to become a real estate agent, you got to think about it. You're not going to get your real estate license and automatically know what to do. You're not going to know what values are. You're not going to know any of these things. You have to team up with a good broker, a successful broker, so they can teach you. That's really important. And that's how you're going to learn. Getting your license means nothing, right? So unless, like, for example, I got an accounting degree. When I got my accounting degree, I did not learn how to do taxes or bookkeeping or payroll in college. They only taught you concept. Same thing when you're getting a real estate license. You're getting taught concept, and you're being taught law, so you don't break the law when you get your license. The actual know-how, practical knowledge is learned in the field. So that's also the difference with my course, because I'm teaching you practical knowledge that you can actually use, that if you use information, you're going to get an actual a return, an effect for it, because otherwise you already had enough theory. You already learned enough theory and heard enough stories. You need to know actually what to do step by step so you're prepared in 12 months to get your next deal. Mark says, you should make your lives rewatchable. So Mark, I have a YouTube channel and all my lives are saved on YouTube. So you have like tons of hours of Q&A on my YouTube channel. So definitely, if you guys haven't done so, check it out. I'm going to be posting this video on my YouTube channel, all right? And I want to be putting that on my story for you to swipe up and go. Remember, my YouTube channel is Pascal Corcus. It's my name, right? Same thing as on IG. So subscribe and hit notifications. So every time I put up a new video, you're able to see it. So I'm really trying to help everyone learn what I learned when I was younger. But I had to travel because we didn't have YouTube 15 years ago. I had to travel and meet with people and learn all this stuff. And it wasn't fast, right? It took me a long time to go meet with all these different people and work for free or pay for mentorships and absorb this information and then use it, right? It takes a while. Nico says, I didn't know about taking a line of credit. Thanks for that. You're welcome, Nico. Mark says, you should make, okay. Brave says, yes, make this rewatchable. So this is going to be going on to my YouTube channel. So check it out there. And make sure to like, subscribe, share. You know, I appreciate that. Appreciate all the love, all the hearts, the thumbs up. Nico says, is correct about the car loan? Yeah, Nico, it is correct. If you pay off your car loan, your credit score normally goes down, not up. Brave says turbo is horrible. I don't know. Turbo. People really want to make this rewatchable. It's the third or fourth comment. All right, so Brave says, send me a link, please, on those books. So DM me, and I'll send you the list of the books. And he says, real talk. All right. All right, so Nico says, compound interest with stocks after 40 years, even then, is impossible. Exactly. Like, we are not we don't have a gold-based currency. We don't have an asset-based currency, right? We have, our money is not real. Our money, if you look at all the money in the world, it's like note. It says note, reserve note. This can be used as legal tender. What it's saying is the government gave us an IOU, right? They gave us this cash, and this cash is actually a loan from the government to be used as money. So a lot of people will say, hey, take this cash and pay down your loan. So you're saying, hey, I took a loan to pay down another loan? And this cash has a 3% interest rate on it. If you didn't realize, the money in your pocket has roughly a 3% interest rate associated to it. And if you don't know what I mean, ask me and I'll tell you why. Mark says, that's freaky wild. They're trying to keep the lower class oppressed. Honestly, brother, I don't think they're trying to keep them oppressed. I think that lack of knowledge, lack of people going out there trying to learn is the issue. The other issue is a lot of people that I knew when I was coming up is that a lot of people just thought they knew everything and they were not willing to hear anything different than they already knew. So even now, when I'm trying to teach people that I know and have seen me come up and build all this wealth will still be like, I don't like the way you're doing things. I don't want to do it that way. And I'm like, I do it this way because I have to do it this way. I don't do it this way because I want to. It's not like, oh, I'm in love with getting loans. I do it because this is way that I've figured that works. If there's another way that works, that's as low risk as it is, in my opinion, this is extremely low risk. Show me. I'm willing to learn. Stocks are unreliable. Stocks are you're putting control in a company's hands. When you're buying stocks, you're putting the control in a company's hands, right? Now, I love Elon Musk, but it's in his hands, right? And if he's having a good day and he runs a company well, then it's going to do well for you. If it's not, then it's not. Now, I did buy Facebook when it first came out. I did buy all the companies I do believe in, but that is not where all my money is. 99% of my money is in real estate because I have the most control and I have a significant gain from real estate. Because if you're putting down, if you buy the right deal, like I try to buy properties that are like significantly undervalued, and I only have to put down 20% of what I'm purchasing it for. So if I put down, again, I put down $40,000 on that fourplex that I purchased for 180. I only put down 40,000 of the 180. It is now worth 550. So 40,000 grew to 390,000 of equity. You can't, it's almost impossible to do that consistently in the stock market without taking on a huge amount of risk. Aqua says just printed more. Yes, they did just print more money. They printed so much money that, I mean, I think we're going to have a drop in asset prices in the next year. But after that drop, I think we're going to have another inflationary period, you know, just like we had after the 2008 crash. Mark says stocks are super low right now, though. I'm going to have to disagree with you, Mark. I think they're very expensive. Remember, expensive is not based off of price, but based off of what you're getting for the money you're spending. These companies are not going to make any money this last quarter. And you're telling me that right now they're only went down like 20, 30%? We have the worst unemployment since the Great Depression. Like, I don't know if people understand how bad it really is. Like, what's happening on Wall Street and what's happening on Main Street, there's such a major disconnect, bro. Major disconnect. So I don't want you to get falling into that, oh, stocks are really cheap right now. I don't think they're cheap. I called it. That I said the market's going to hit 16.5, and from 16.5, it's going to go up. I called it, and it happened. And I'm going to call it again. We're going to have a double dip in the stock market. Prices in the stock market are going to drop again, and they're going to drop hard. When is it going to happen? I don't know exactly when it's going to happen, but I think it's going to happen in the next 12 months. For sure after the election, right? Once the election's over, they're going to stop padding the market the way that they have been, and it's going to drop hard. And also, the Fed shot every single bullet they have in their gun. So this crazy market that's going to happen, they almost have nothing left that they can do, right? Nothing left. They're giving out money like crazy. They're just giving it away. Like, how much more are they going to be giving money away before it tanks? Who are your top 3 speakers / mentors? I mean, I like Warren Buffett. I like Benjamin Graham, which is Warren Buffett's mentor. I read his books. I like Robert Kiyosaki, Rich Dad, Poor Dad. Speakers, mentors. I mean, there's not really speakers, right? There's books. So, yeah, the books. So I'll send you the list of books I think you should read. Brett says, how long does it take you to pay off the large line of credit? Brett, I don't ever pay off the line of credit. To be honest with you, I don't pay it off, because what happens is I use that money to buy another piece of real estate. Okay. So now that real estate is bringing me extra cash. So now I'm bringing in, right now I'm bringing in roughly about $10,000 a month net. After all my expenses, I'm bringing in about that much for my rentals. So that $10,000 builds up, right? Every month. I don't really pay down the line of credit. Sometimes I'll pay down a little bit, but normally what happens, I'll save up another like 50 or 100,000. And the second that happens, I put that down on another piece of property. Or I take that money and I start doing upgrades to the existing properties. So that's what I normally do. See, right now, I'm not on a paying down place in my life because I'm 34 right now, right? I'm not in a place to pay down debt. I'm not 65 years old, right? Once I'm 65, then I'll probably start paying down debt, doing certain things like that. But for now, I'm in a position of picking up debt, but good debt that's purchasing assets, okay? Don't just go get a jet ski and get a loan, or go get a car and get a huge loan. Buy assets with that debt, because as long as the debt you're getting is like 3-4%, or I used to get loans at like 8-10%, but I was making so much money on the rental property that it didn't matter. It paid for it easy. Once I get a loan for 15% on a rental property, and despite that, I still made enough money on that property to cover the bills. Remember, the loan isn't what matters. I see some people talking about, oh, it's a 5% interest rate loan, and I don't want to do it till it's 3%, or I don't want to do it till I don't have to pay PMI. I say, what do you care if you're paying a 5% loan? What do you care if you're paying PMI? If that rental property is undervalued, if that property is bringing you enough cash, that is what matters. It's the asset that matters. The debt only matters if you're buying a bad asset. When people are complaining about 1% and you're like, well, you know what? Because it's 1% higher, then I can't cash flow this property. That means you're buying a bad property. 99% of the time, you're buying a bad property. That's the issue. All right. Mark says, great time to invest. After this pandemic, not too sure. A lot more risky. Actually, I think it's better after the pandemic to buy, not before, right? So now I think it's more risky to buy than in 12 months. 12 months is going to be actually better to buy because, again, if people lose their properties, where are they going to sleep? They're going to sleep in your rental property because they don't have a house anymore. Your properties go up. Rent goes up in a bad market, not down. They might flatline initially, but then it's going to go up because there's less people own real estate. More people are renting. Supply and demand. More demand for rental properties. So Carl says, Pascal, if I take out a line of credit on my home now, do you recommend I buy another property now or wait for the properties to go down? I would wait for the properties to go down. So does that mean you might have to pull the money out and sit on it and pay interest on it until you find another property? Yes, it's possible that can happen. You just have to make sure that if you're doing that, you're being very conservative. You're being very cautious about how you do it. Mark says, where can we find a good, reliable mentor? You should see that's a really tough question, right? Like it's not like you can look in a magazine, right? You're going to go do a lot of research online. You're going to follow a lot of people online, and you're going to see, who do you trust? Who's real? Do research. Is this person really doing everything they say? There's 1,000 kids out there that are super young that are saying, I'm a mentor and I make all this money and look at my car and look at my whatever. Bro, it's so easy to stand in front of some person's car on the side of the road and take pictures. You can pay money to rent a jet, not to fly in the jet, because that's expensive to actually fly in it. You can pay money to rent a jet just to take pictures of it on the ground. So you're sitting in the seat and they're taking pictures and you're standing in front of it and you're taking pictures. Bro, no one drives their Bentley next to the freaking jet. You don't park your Bentley next to the jet. It's not real, okay? That doesn't. If you see someone drive their Lambo next to the jet and they take a picture, it's fake because you don't park their car there. You park your car far away. So it's crazy. So do enough research and see this. People know what they're actually talking about, because if they're flashing that hard, then it's not real. All right. So Mark says, sweet. I wish I knew that before. And he says, wow, I didn't know that. I'm going to check out your YouTube and watch your older videos. Yeah, lots of great content on there. Lots of educational stuff. Again, when you learn this stuff, I had to read things 3 times because the stuff you're learning now is things that you've never heard of or you're very, very new. And the things that we've been taught that are incorrect have been taught to us 1,000 times. So in our head, we are going to be it's going to be very tough for us to go and act on this information you're learning. It is tough, right? I'm not going to say it's easy. It is hard. It's not hard to do. It's hard to act on that information. It's hard for you to go and Pascal said, go buy a fourplex, but I'm afraid because it's fourplex, 400,000. And if I bought a condo, the condo is only 150,000. And man, it's if the payment is going to be so low. I know it's hard in your gut. You're going to be testing your gut, but it's so much cheaper to buy a 4-unit than to buy a condo for 150. Paying 400,000 for a 4-unit is cheaper than buying a condo for 150. When you run the numbers enough, you're going to see that it is very true and it is actually safer for you to buy a 4-unit. Any advice for a first-time homeowner? Buy a 4-unit. Save your money for things that could break. Be prepared for that. Opinion on stocks. I think stocks are extremely overvalued. They're overpriced, and they're going to fall hard. Benji says, tell us why. I don't know what the question is to the why. Again, feel free, guys, to go live, and I'll answer the question face-to-face. It's a lot easier to interact. 3% interest rate, bro. Okay, so you tell us why for the 3% interest rate. All right, so again, the DMs are a lot harder to keep up with them. So the government in the Fed it announces and it says their goal is to cause 3% inflation. That is their goal. Okay, now if you have 3% inflation, what is it? $10. Okay, so 3% inflation on this $10. This here, that's their goal, to have 3% inflation. So how do they do that? They do that by printing more money. If they print more money, it will cause inflation. What happens is the dollar goes down. So inflation really happens because it prints more money and the value of the money goes down. So this loan of $10, right? This, what does it say? Federal Reserve note, right? This loan is of $10 that they gave you, has 3% interest rate on it. How? Because next year, you can't buy $10 worth of stuff. You're only going to be able to buy $9.70 worth of stuff. And it's 3% every single year over 10 years. So in 10 years, you will need $13 to buy what you used to be able to buy for $10. This keeps on reducing in value. Okay? So what you need to do is replace it as fast as possible. That's why Grant Cardone says he gets rid of his money as fast as possible. He gets rid of the money as fast as possible and buys assets with it, right? If you buy a good stock, yes, you can still make money that way as well, but you don't have control over it. That's why I like real estate. And you get the leverage of real estate, so you can get 5-to-1 on your money. So if you buy a good property and it gains 3% a year on it, $100,000 property is going to be worth 103 the next year. $100,000 property in 10 years is going to be worth $130,000 in 10 years. So if you're able to put down 20 grand in 10 years, you're going to not have 20 grand in equity. You should have 50 grand in equity if you bought the right property. And that's not having to worry about, oh, is everything going to go up in value and things like that. No, you're basically betting on the government printing more money. So it's a lot easier to win. All right, people asking to go live, but for some reason it's not working. All right. What's going on, buddy?
What's up, man? You had said something about car loan, paying off your car loan, and you something about your credit going down. I don't know if I overheard or I missed it. That's why I tried to get the question in, but then you started talking about a bunch of stuff. So I just wanted to ask about that.
So, okay. Let me back it up a little bit. The answer is most of the time, not all the time, but most of the time when you pay off your car loan, a lot of times your credit actually goes down.
Okay. So you mean like once you get done, I'm in a car loan, I'm paying on my car, I got 2-3 more months for the complete. Once I complete that, my credit actually goes down.
A lot of times, yes. Let me explain why. So let's talk about, remember, everything here is based off of something, right? So this is what it's really about. Back in the day when you would get a loan, you're going to put on there references, okay? You know what? The bank doesn't know me, and the bank's actually giving their money. Let me put Pascal's name on here. Put his phone number. Call Pascal. He'll let you know I'm good. Hey, my boss, I'm going to put my boss on here. I'm going to put on all these different people that I know, that they know they can vouch for me. What credit is this? Credit is a number. And that number is the level of confidence someone can have in you to pay back the debt. Because they don't ask for references anymore, right? They're not going to call me and say, yo, is this guy going to pay back? No, they're going to look at your credit score. That's what it is. So if you have a low credit score, that means they have a low likelihood of this person actually keeping their word. So if you think like word is bond and you got a low credit score, that means that score says your word is not bond. So now you got credit cards, you got car loans, you got all this stuff. When you pay off your car loan, you just killed your reference. So that car loan, when you got it and say it was a 5-year car loan, after you pay it 2, 3, 4 years, for 4 years, that car loan says, this guy's good. This guy's good. This guy pays. This guy pays. For 4 years, 5 years, at the last month you pay it off, you just killed someone that had 5 years of this guy's good. And not only do they say it's good, it has 5 years of consistently you being good. So it's wiped off. It's gone.
Right.
So if your credit is weak with multiple sources of reference, when you get rid of one, you dropped your score.
Okay.
So that's why that's why, like I said, it's not that black and white. And that's why in my course, it talks about each section saying, look, I know you think this, but this is not how the game's played. And this is why it's played this way, right? And to go into your credit report alone, I mean, you can go like hours and hours of what, why, how it's played. But as you learn it, you're going to realize that you have a different credit score for car loans. You have a different credit score for your credit cards. You have a different credit score for home loans. So when they pull it and they pull it in a certain way to get back data, the data that they get back is not the same for each source. So let's just say, for example, like my buddy doesn't have any home loans and it's harder for him to get home loans, but he has multiple exotic cars and he has a long track record of buying exotic cars, making payments on exotic cars and so on. So when he wants to go get a $250,000 car loan, it's pretty easy for him to get it because he has such a history for that type of credit.
Okay.
So
basically you're saying like, basically if I have multiple things in one area, multiple housing, it's going to be easier for me to get housing. So once I get one and I show a good history, it's going to be a lot easier for me to get more.
Yes. Now, but remember, housing loans has multiple factors. So there's credit, there's tax returns, there's bank statements, right? And there's cash flow. So if you have the credit, they can say, check, he has the credit for it. He has a history for that. But if you don't have the cash flow on your income, if you don't have the money in your bank account, or if you don't have the tax return to show it, you can't check off those other boxes. So that's where, for example, I might review your stuff and I might tell you, pay off the car loan. But you're like, but Pascal, if I pay it off, my credit score might go down. I said, I might come to the conclusion to say, you know what, it's worth your credit score to go down because now I actually opened up more available credit for you to purchase a larger home because your debt to income ratio could be out of whack. So I could probably review it and say, you know what, it's worth you dropping 10, 20 points on your credit score for you to be able to get another 5, 10% in purchasing power for a larger home or say another multi-unit, you know? And so now you can only afford 1 unit, but now that you paid off your loan, you can get a 2-unit property. So it's not like,
the history of my credit and really figure out what I'm trying to do and go about it that way.
Yeah. So you have to look at your credit. So that's not just one thing, right? So don't automatically think, hey, I'm not going to pay off my car loan. I'm not saying that. What I'm saying is be conscious that's going to happen to make sure that other parts of your credit are strong enough to have the issue if your credit score drops for paying off your car loan. You have to have the other parts of your credit stronger.
So what do you suggest for so in my case, all I have really on mine was I had a credit card from college, which I didn't know nothing about credit. Mom never had banks. She didn't know nothing about banks. I basically come from a history of this, not knowing too much about money, so I got a credit card.
Mm-hmm.
ran through that, made bad decisions, paid on some of it, but the 7-year, I don't know, like it's a 7-year thing. It basically disappeared or something.
It normally will fall off. Huh?
Say it again.
Normally it falls off after 7 years. It's not guaranteed, but it should be falling off. Yes.
So, like in my position of just having basically student loans shown on my credit, what do you suggest?
Student loans is not really enough. What it sounds to me is you have an issue of not having a lot of references saying good things about you.
Right.
Does that make sense? Like right now you have the student loan, which probably says he's paying the minimum payment. So it's not really saying much about you, right?
Right.
You have to probably have more things saying good things about you. So if you have a car loan, you're about to pay it off, you're about to kill one of the two people saying good things about you.
Right.
Now,
so to build my credit, what would you say, like in my situation from knowing that, what would you suggest for me to go about doing?
I'd probably say get 2 to 3 credit cards.
2 to 3 credit cards.
Yeah. Now, initially, your credit score is going to go down, but then it should go up. 6 months, 9 months, 12 months.
Use those to build credit because I want to get into real estate. Like the stuff that you're talking about, I always want to do. I play basketball, semi-pro, you could say pro, TBL right now.
Nice.
But I want to use that money and stuff. I just don't have the credit. So it's like I can get cash and stuff, but I don't have the credit to do stuff with my money.
Yeah, and remember, think of it this way: like credit is going to multiply, so you can get 5 to 1 on your money. So if you get 100,000, 5 to 1 is 500,000, and if you're able to make 5-10% on that 500, it's a lot of money to make that annually. So I mean, I get what you're saying right now. I get like a lot of ball players DMing me or entertainment's DMing me, asking me these questions, saying these things, or singers. It's common because again, most people don't know this, and what I tell them is that you got an opportunity to make money. Do not spend it because the money you're going to make, you only have about 5 to 10 year career life. That money has to last the rest of your life. So how you got to think of it like this. Same people that win the lotto normally blow all their money in 5 to 10 years, just like most athletes. 90% of lotto winners and 90% of athletes lose all their money within 5 years. Okay? Because they don't know how to spend it. Another tip, same thing with food is like money. Most athletes within 5 years of being out of the game become super overweight because they're so used to eating and they stop working. Same thing. They're so used to spending and they stop working. So you got to act like that money is not like money. Oh, I earned it and I'm going to make it for the rest of my life. No, I made my money. I hit the lotto. Now I'm going to take that money and put it into an asset that's going to pay me every month. So like I got the i8. And if you look at my old videos, I put out and explained how I got the i8 for free. How did I get it for free? I didn't go out and pay for the car. I went and bought a rental property, and that rental property makes almost double what the payment on that car is. So that rental property is paying me, and I go make the payment on the car. Now the car loses value every year, but I'm paying it down, and the rental property goes up every year. And I'm still going to be getting the money every month after 5 years. So in 5 years, that car could be worth nothing. It doesn't matter. I'm going to use that money and go get another i8 or get a Lambo or get a Ferrari, whatever. But I have the money from that thing paying it. I'm not paying for it. It's paying for it. So and I say, like one of my assistants, I was telling him, I was like, look, he wants like, I want a new phone. My phone's cracked. I said, okay, cool. Buy something, a stock or something that pays you a dividend that's going to pay you $50 a month because a new phone's $50 a month. So let it give you that dividend of $50 a month. You take your cash, you buy the stock, it gives you $50 a month, then you buy the phone. In 2 years, when that phone's not worth anything and you want another new phone, you're not going to be like, oh man, I just lost all this money on that other phone. No, you still got $50 coming every month to get you the new phone. So now you got another and another and another and another. Now you're not paying. Remember, like that's the saying, you're working for your money. No. Now your money's working for you. So when people are like, oh, you know what I mean? Like you're not, because I use super conservative, right? I used to drive a car that was into 5 car accidents. And I never hit nobody though. So when I would get it fixed up, I tell them, you know what? Just fix it. Don't even paint it. The car was beat up. I had 13 rental properties at the time, but still beat up. I didn't care. I was saving the money. I said, if I can't get a supercar, I don't care. I'm going to drive the same car. It doesn't mean anything to me. So, but I mean, that's the thing. Like, either it's going to be really nice or I don't care, you know? So you can see where I'm going at with this, right? So now I have my assets working for me. Like, this car doesn't cost me much because I'm not paying for it. It paid for it. As it falls in value, my assets go up in value.
What other things are like? What you said, like what other assets could I be getting into besides a home? I mean, real estate homes is something that interests me.
I mean, that's going to be your biggest, that's going to be the biggest multiplier, right? So like, either you're going to buy the home or you're going to join like an investment group, because remember, when people like yourself or an investor is buying a rental property, they're getting 5 to 1 on their money. So if it's going to go up, you know, if they're planning to go up 10%, it's going to be significantly larger. So you're getting a big multiple on your money. So real estate is the way to go. I mean, sometimes you can get into some stocks that are good, but I think right now they're crazy expensive. Part 2, you can't control what a company does. So that's why it's a lot easier. Yeah, you can. So that's why it's a lot easier where even if you join like an investment group, there's so many out there that you can find out like, well, what are you guys buying in? Okay, that's that the type of stuff. Okay, you know, you're buying in the area I like, you're buying the type of asset I like. You can buy rental property, you can buy storage units, you can buy mobile home parks, you can buy a lot of different stuff. So you can basically feel
So how do you get into investment groups? Because you teaching me something new that I never even heard about.
So
honestly.
Like basically like, so I have an investment group, right? And normally with these investment groups, they're like kind of private. You get to know the person that's investing and the person gets to know you. And basically the number one thing I say is this: doing an investment group is like getting married. If you don't like that person, don't get married, because when you put your money into the deal, it's like buying a house or a fourplex. You buy that property and the market tanks, you can't sell it for 5 or 10 years. So you're going to be stuck with that property. So make sure you're buying something you like, or in an area you like, or something you have faith in, right? And make sure the people you're partnering with, you have faith in, right? You're not just going to like, it's also not a good idea to just date someone that's like cute, right? Like they're cute, but like you need something more than that to make it real, you know? Huh?
No, I was gonna say, how long is the looks gonna last for? It don't last forever. So.
Exactly. In a property, a brand, that's another reason why I don't like condos. A lot of times they're brand new or just super cleaned up, where they're really cute, but they don't have a lot of value. So that's why I'm not into condos, because they're so cute looking and they're such a cool area. People pay so much for them, but they're really not valuable. There's not much like equity in there, where there's much more than it being cute. It's not going to make money. It's not going to make rent. They're very expensive to maintain. You know, it's like that cute girl. She's very expensive to maintain. I'm like, I'm not looking to maintain anything. I'm looking for someone to maintain me. You know, so.
So do you often, like, if people reach out to you, DM you, like, I mean, I know you definitely probably a busy man at that. But do you often get back? I know you said something about books too, so I wanted to DM you to get those. I wasn't a big time reader growing up. I actually just finished the first book ever in my life.
If you read like the first chapter or 2 of these books, you're not going to want to stop. Like if you read Rich Dad Poor Dad and you get into like 2 to 3 chapters, you're not going to want to stop. The other book is Think and Grow Rich. Like me, I'm a very slow reader, and I'm like, I wasn't born here, right? I'm strong in math. I'm like ridiculously strong in math. English, I think I sound really dumb when I talk. Like in my head, I think, and I'm like, oh, then I listen to myself. I was like, wow, I sound so stupid. So I feel you when you say like, about the book thing, right? And it pushed myself to read and stuff. So these books, once you start reading them, like How to Win Friends and Influence People, like they're really good stories. Like that one's really Bible based. So it has a great message in it. And you're like, okay, you know what? I get this. I understand it. I can feel with it. So a lot of these books are going to be entertaining. They're not boring books. So yeah, just send me a message. I'll DM you the thing. Most of the stuff I work with, and again, a lot of people ask me about this. I let people know, hey, I found a deal. At that point, I say, hey, I found a deal. People can DM me and say, hey, I'm interested in the deal. Once basically we have funding, it's done. It's closed. I'm not one of those guys that there's a lot of guys out there now. They'll be like, yeah, give me your money. And they don't even have a deal. Or this is another big warning, guys. I'm opening Pandora's box. What they'll do is they'll get your money for a deal, but the deal doesn't make much profit because they make all their money in the front acquiring the asset. So they'll charge a large acquisition fee and they make a ton of money to their pocket. And they don't care if the property doesn't make much money because most of their profit is in the acquisition fee, or and the second amount of money they make is at the end. So there's not a lot of money in the middle, which is what you're hoping for, is that there's money in the middle that you're getting paid every quarter. So they'll try to do that. So I only buy deals if it's a good deal that we're going to make money on. And right now it's extremely hard to find good deals, but they're going to come in 12 months. So what I'm telling everybody is this: study.
Yourself, you are being patient until all this stuff is basically over.
Yeah, because I'm like, I got money stacked on the side too, and I want to buy. Like, you know how Warren Buffett says, I got money in my pocket and it's itching? Like, it's itching. I want to spend it, but I'm trying not to buy anything fancy. I'm trying to save my money. I'm trying to get ready to buy these assets. Sometimes there's some good deals come out, and I'm like, you know what? It's not good enough. There's going to be better deals out there, and I don't want to get mad that I missed out on them. So just be patient. They're going to come. So just save it up. Get ready for it.
You suggest the way, because me and my lady were really looking into getting a house, and we talked about a house. Of course, we got 2 kids. But we definitely always talk to her about side by side. You know, like I said, I'm a ball player growing up in school. That's always our picture. You know, like live in one side, let the other person pay for your living.
It's a good idea, but I'm telling you, if it's not an amazing deal, I wouldn't do it. Warned them that the market was going to go down, and I basically said, hey, drop significantly, and that house ends up selling for 10 or 20% less than what you bought for your house. How would you feel? Because that's really going to happen. I really feel houses are going to fall 10, 20%. So if you go buy a house, just imagine if it dropped 10% from the price you paid for it, how would you feel?
Or like I should have waited out, especially like you said. Of course, no one listening talking to you. Definitely waiting out.
Yeah.
But you'll feel like a dummy, though. In my opinion, I would feel like a dummy.
And the thing is, now you know. It's not like you guys, and that's the great thing is that you guys are following, you guys are listening. You know, when I hear something happening and I hear it from my sources, a lot of these people don't come out and they don't talk to everybody. They're not like me where they have a channel to let everybody know. The people that they know are in their circle. Like there's a lot of, like one of my benefits was I became friends with a lot of people that are great people, but they're very introverted. They don't talk to a lot of people. They're very shy. And I was always that guy that was like talking to everybody. I was everybody's friend. I knew everybody. And they'll tell me, yeah, this is what's going on. But they only know the mortgage industry. And I'll talk to a realtor. They only know the real estate industry. I'll talk to tax people. They'll only know this part, or lawyers. They'll only know that one part. And then I piece together what everybody's saying. And I'm like, okay, I'm seeing what's going to happen. And I see the domino effect. So I'm like, all right, let me get prepared for what's going down. So just kind of be patient, right? Let me tell you this. If you're not getting a great deal, if you're not saving 10, 20% off of what you think it's really, really worth, probably is not worth it. If you're paying retail, it's definitely not worth it.
I definitely love how you told us though, just like learn your market. I went to school for sports management and stuff, so just learning and knowing like your market. Of course, we're talking about sports. It's a big but small field compared to, I would say, like business and real world and real life. So just taking that aspect into it, I appreciate that. Like really looking into the market and stuff. So definitely gonna pay more attention to that, and just looking around instead of looking into that one property that you look at. It's like, oh, that's the price, this is the square feet, and all this other stuff. Instead of looking at, well, how much did the other houses sell for, and how do you go about that though too?
It's a lot of research, and then also team up with realtors that really are doing it right. You know, like everyone's like thinking I have my real estate license. I don't have my real estate license. Do I buy and sell my own properties without a license? Yes, because you can do that legally. But a lot of times I'll team up with a real estate broker because they'll know something about something that I don't know. And they're worth paying them the money to get that information because, yeah, they made 3%, they made 6%. But if they helped you save another 20, hey, it's worth them making their money, right? So you need the right players on your team. Just like as a ball player, you have, like you pay agents, right? Well, what do you pay the agent 10%? Well, you paid them 10% because they got you 30% more. You're not paying them, they pay themselves, right? The good ones. And that's where you have to know your market. You have to study the game. Like part of the course, a lot of people who are going to take the course are probably never going to be a real estate investor. They're probably most likely going to end up buying deals with someone else. But if they don't learn this and they don't figure out, hey, this is the stuff I need to learn, and they can't vet the person they're going to invest with, then they can be like, man, I thank God I took the course because I figured out this guy's a fraud. He doesn't even know what he's talking about, So then, because a lot of times, I'm telling you, I've been around with a lot of different investments out there, and different people that talk about what they know what they're talking about, and if you don't study and educate yourselves and know what questions to ask, you won't be able to figure out who's telling the truth or not. Because a lot of people out there, the money they plan to make money, and the money they plan to make is basically the money they take from other people. They're not planning to make money off of, there's a lot of vultures out there. So just be very careful,
No, I definitely am. That's why I appreciate you. I've been following you for a while. It was actually the first time I ever did see you on live. I'm not a liar or anything, but I've been following you for a while. A lot of inspirational stuff I take from you and that you post and stuff. So I appreciate that. I'm big on that type of stuff. Like I said, I'm a father too. Just trying to be a role model for them, teach them knowledge is power. They're actually watching in the background and stuff right now, and listening. They thought it was boring at first, but I just keep trying to tell them, like, you gotta learn, you gotta put yourself out there. Knowledge is power. So I appreciate you. I'm definitely gonna DM you.
I'm gonna leave you with one thing. How I learned a lot of the stuff I learned now, my dad wouldn't let me go out and play in the street. So he would take me with him to other people's like dry cleaner or convenience store or mechanic. And he would make me like sit there. And I was young. I was like, 8 years old and plus. And I was like, this is boring. But obviously you kind of pick up on things. You pick up on things more and more and more. And then you start like building things in your mind to know what's what, how things work in the business world. So yeah, it's boring at first, but like a lot of the kids I knew, like I have a lot of Asian friends, I have a lot of Indian friends, and all of their parents made them go do something in medical or something like that, right? And they didn't like it, but now they're 30, they love their life. They're like, yeah, I love being a pharmacist. This is awesome. It's great. I get my vacations. I get my money. I love what I do. So not always do you enjoy what you're doing, but when your parents are trying to put you on a good path and you're trying to do that to your kids, like I'm doing for my kids, they don't always like it. I don't like yelling at them. I don't like spanking them, but we do the things because we care about them, because we want them to develop into good people. And that's, that's our role as a father and as a role model in the community, So, I respect that. And one day they're going to appreciate you for that.
Definitely, man. I appreciate it, man. It was good talking to you, man. Talk to you soon. Definitely gonna DM you, man.
Sounds good. Have a great night.
All right, you too.
All right. I'm going to take a couple more questions and then call it a night. The battery's dying. I was able to switch it out. Normally the minimum investment is like 100,000, but I'm thinking, so the question was, how much money do we need to invest with you? So normally the minimum investment is 100,000. Hey, what's up?
Hey, Pascal. What's going on, man? It's a pleasure meeting you.
Pleasure meeting you too. How you been?
Good, man. Good. I've been following you for over a year now, so you're always putting out a lot of good content. And today, like, you put out a ton of good stuff. I was actually, I think we had a chance to kind of DM each other and talk a couple of times here and there. Just to recap, a couple of things we mentioned was I live in California.
Mm-hmm.
I work out here. I moved from New York, but Florida, I'm sold on that area. That's the area for me to invest in. I used to live in Florida in the military, and I used to live in Texas in the military. So I mean, landlord-friendly, states. You touched on that earlier. They're my favorite. And living in New York and now living in California, I moved it's going to be 2 years now. I work in law enforcement here. It's just, with everything going on, it just makes more and more sense, just to be in a landlord state where taxes are lower. I mean, it's just, to be in New York, anyone could tell you it's just nuts, especially with the governor saying things like telling tenants not to pay their rent. That to me is nuts. I've never heard of that. I'm not even in the last crash in 2008. I was in the military when that happened. I didn't feel that, but never did I hear anything about a governor telling the entire state, don't pay your rent.
Yeah, it's something else. And the thing is, even if they give a loan forbearance, what's your mortgage? 35%? How are you going to pay the water, the sewer, the garbage? And in New York, if you shut off the water, you're going to get sued. If you shut off so you're going to have to keep paying out of your own pocket. And you're like, where am I going to come up with this money from? It's crazy.
Absolutely nuts.
Yeah.
I can't even. You touched on something just now. You mentioned that you are not a licensed agent, but do you have access to the MLS out there?
So normally what you'll do is when you talk to other agents, you tell them what you're interested in, and they'll automatically email you the type of thing you're interested in. So you'll get an email from an agent. They don't even know that you even got that email, but it'll say their name on the email. Mm-hmm. And then I check Zillow, I check LoopNet, I check all the other sources as well.
Okay, so the same that everyone else can access, basically. There's nothing else. You don't need to have the MLS in that sense.
And technically, no. But again, if you're on a list, the second it goes up for sale, you'll see it, right? So the second there's a 4,000 square foot house that I just put under contract this week.
Yeah.
It was selling for $280,000, right? Normally that size of a house would sell about $600,000 to $700,000 in that neighborhood. It went up for sale for $280,000. Within 10 minutes, I called and said, I'm buying it. Because I got the email,
So
I checked it, I bought it. Done.
So the relationship that you made up with the agent, basically, to put you on that list. And this is not just one agent?
Anyone could have gotten that email.
Okay.
But I have established myself a name in my market. So when people know I'm calling, they know I'm serious. Like, I'm not calling you to kick tire. If I say, hey, I'm buying it. And she told me, hey, I'm going to go, I have a meeting. I said, okay, go to your meeting. I'm going to go look at the property now. I'll call you back and I'm going to let you know I'm buying it, right? Like, when you're done with that meeting, write it up. It's done. There's no need to,
My last thing, and then I can kind of let you go. I don't want to keep it too long. So, when it comes to financing deals, I can't stress enough in terms of, I haven't got my first property yet. I'm just raising capital. I didn't know about the 12 months about waiting. Thank you for that. That's awesome. Because at this point, everyone that I do speak to, they're a little wishy-washy, whether it's a good time to invest or not. I know deals are happening, especially in Florida. People are buying. People are selling. It's still going on.
Mm-hmm.
But no one is given as far as like information on, hey, 12 months now is probably going to be a pretty good time to buy. In terms of fact finding, speaking to the right people, you mentioned that, going to the banks and speaking to those folks. I do law enforcement. I mentioned that, and I also do Uber, and just something to raise capital on the side when I'm not working. So I happen to meet someone as a passenger who he does financing for homes, for mortgages.
Mm-hmm.
And I can't stress enough how important it is to get the actual information and facts and numbers and look at what banks do. So I guess my question is, when it comes to the time to invest in Florida, do you provide financing for those type of investments as well for folks that are out of state and that sort of thing? Or is it just specific investors that you look at?
So no, we're going to be doing single family homes up to 4 units. First time home buyer, we'll be doing all of that. We also do for investments as well. So we'll be doing anything in the state of Florida we'll be able to take care of. So
That's great. That's awesome.
And we also do the taxes, to prepare your taxes, to make sure you do them properly to get the most out of your mortgage. And we also do home insurance as well. So we'll be doing basically A to Z If you already have someone to do any of those other things, that's fine. But basically, if you don't have a professional that can help you in each area, we can do all of those things.
No, that's perfect. I don't have anyone in that market, and I know for a fact that's the market I want to be in. So that's beautiful. Thank you. I'll keep following. I appreciate your time.
Awesome. Have a good night.
You take care.
So to answer the previous question, it says, how much money do we need to invest with you? Normally, it's $100,000. There might be an opportunity in the next 12 months to be able to have less than that to join on deals as well. I think there's going to be a crazy amount of deals available out there. So there's going to be so much opportunity for people to jump in and do deals. I am Dream Chasen says, is it a good time to refinance right now or cash out refinance and save the equity in the home to hold to buy a good deal? Yes. If you're planning to sell in the next 2 to 5 years, you probably better sell now to get the most money possible. If you're planning to do a cash out refinance or use any equity in your home, it's better that you get it now, because there is no guarantee it's going to be available in 12 months. Okay, that's my warning. I cannot predict the future. I can tell you that having the largest percentage of unemployment since the Great Depression and having 20 million people not pay their mortgage is a really bad sign for home prices in the future. I can tell you that with a certainty. How much? That's a big question mark. So Ace says, can you elaborate on a 4-unit versus a condo? So on a condo, you have to pay an association dues, right? The association dues are going to cover the roof, the painting, the maintenance of the property. Well, on a 4-unit, let's just say the association dues usually at least $300. On a 4, say you have 4 condos, 4 units is $1,200 a month. If you owned a 4-unit building, you're going to be putting your $1,200 into your reserve account. That's $1,200 more. And it doesn't cost as much money as a condo association is going to charge to change the roof, because you're going to be able to do it yourself. You'll be able to negotiate a better deal to cover one roof over 4 units. It's a lot cheaper to get a 4-unit, for example, on a 4-unit property, say that getting a roof redone. My last 4-unit property, it cost me about $16,000 to get a roof redone. On a house, I was flipping a house. It cost me $12,000 to do a roof on a house. So that one roof for $16,000 covered 4 units, where $12,000 covered one house. So you can see here, when you're spreading the cost over multiple units, you're able to pocket a lot more money because your expenses end up being a smaller percentage of the total money you bring in, which makes more money for you or leaves more money for you. Adam says, let's make trillions, baby. Yes. I like it. This is obviously, you guys can tell, I love this game. This is an awesome game. This is my game. I like it. Thanks for all the love. Thanks for all the thumbs up. Thanks for all of the positive feedback, for sharing with your friends. Again, for the rest of this month, my course is on sale, $297. Go just check on and read everything that's being offered in the course. You're going to see it's a ton of information. I mean, I was told I should be charging way more than this. I should be charging close to $3,000. Now, I'm not gonna, because I'm not greedy like that. But at the end of this month, it is going to go to $997. So get it now while it's cheap. And one person and their friend is getting an opportunity to come and meet with me for a week at the end of July. All right. So that includes staying with me for the week and the hotel stay at my coastal cottages, the ones I always record and show you guys. So it's great value. Go check it out and be blessed, guys. Remember, invest in the front end, save in the back end, making a lot of money. I'll see you guys later.